Okay, so we are going to talk about another subject area, venture capital. Now, when we talked about insurance, you knew what is insurance. When we talked about share market, then stockbrokers, you knew about them. But venture capital, this may be something unheard before. If you want to develop a country, you have to look at a mechanism where those who have ideas must be given money to make these ideas a reality. Okay. Now, very recently, there was a video clip by a prominent businessman, Dhammika Perera. He was asked about the forex issue in Sri Lanka. Somewhere he says, Apple computers, 3 months earnings, 3 months profit is higher than this amount of loans we have to settle. It's higher than our GDP. Means what? There are very big businesses which have been funded by many other people. How do people start a business? Okay. My simple question here, you have idea. Maybe you want to start up a vehicle service center. Maybe you want to start up a social media network like Facebook or something like Amazon.com. You want to start. You have idea, but you don't have money. Tell me in the chat box, what are the sources of funds available to you? You have idea, you know what to do as a business, but you don't have money. Who will give you money? So in the chat box, just type me some answers. Yeah, you can go to a bank and ask money. That's one option. What else? Informal money lenders. You go to informal money lenders. Okay, so there are venture capital companies. Do we have them in Sri Lanka? Yeah, you have angel investors. Do we have them, or are you aware about them in Sri Lanka? Okay, right. So the first one, banks. When you go to a bank, what happened? You will meet them. They will ask you, come up with a proposal, and you forward them a proposal. The bank or the credit department of the bank will go through your proposal. Banks are very careful when they are lending out. They evaluate good customers and bad customers. How do they identify a customer as a good customer? If you have a very good CRIP report, that is called your payback history, you are a good customer. If you have collaterals, securities, assets, you are a good customer. If so, the bank is ready to give you money. Why? The bank is not printing money. They collect money from depositors and hand over to the people who need money. Fine. Since bank has to safeguard the depositors' money, they will not undertake undue risk. What is this undue risk? You want to start up a website, say social media network like Facebook, and you are confident that you can make billions out of that. But if you fail, what can the bank seize? If you take a housing loan, if you fail, the bank can mortgage. They have the mortgage, so they will take your property and sell it. If you lease out, your absolute ownership moves to the bank. So if you fail, your vehicle will be seized and sold in the second-hand market. So bank is safe. Bank can easily safeguard depositors' money. But you have run a website, it failed. What is the asset bank is having now? Can someone tell me what is the asset? They can seize and sell? Nothing, just the space. Your information is in clouds. There's no physical asset to be sold out. If so, a bank will not come and lend money to Steve Jobs initially or Jeff Bezos initially. Then who will hand over you money to test your untested products? Okay, let's look at venture capital. It's a mechanism of raising private equity for startup companies. Now, your company is a startup company. You want to start up a business. Funding taking place after evaluation of project proposals and done by angel investors. Okay, so funding takes place after evaluation, not what I said as two factors earlier. First, I said your payback history, that's the CRIB report, and the collaterals, that's your asset base. No, the angel investor is not looking into that. He is looking into your project proposal. Can I make a profit out of your business? So when Steve Jobs goes to the angel investor, Mike Makula, he evaluate his proposal and hand over money. Walter Disney, startup cartoons. One day, a doctor, a rich person, called him and said, "Can you come up and meet me? I want to evaluate your business and I want to invest in that." Walter Disney said, "So I can't come today." Then this angel investor, the rich person, asked, "Why? Have you already got an appointment with another investor?" He said, "No, I have given my shoes to the cobbler to mend it, to repair it, and he has repaired my shoes. He asked me $1 and I don't have $1 to take my shoes back." Okay. Means what? Here comes a bankrupt person, no asset base, a very young person. Definitely, a bank will not be ready to give him money for his dream products. Even though he has dreams, that's fine, but a bank will not hand over the depositor's money for a gambling playout. But this angel investor handed over money after giving him $1, or definitely after giving him money to purchase a pair of shoes. So in venture capital, they are not looking at how wealthy you are at the moment. They are not looking at have you already taken loans and settled them perfectly on time. Now, if you are a young person, maybe you have never ever taken a loan, so you don't have payback history, and you are coming from a poor family. Your parents are not rich, but you have ideas. You have workable business plans. Right. You have only one option. Go to angel investors and ask money from these venture capital firms. Okay. Now we are looking at sources of finance for small businesses. This is what I asked you at the very beginning. Okay. So if you want to start up a business, these are the available sources of money. Number one, your own money. Okay. So there are people who have started up businesses by first developing their own capital. There were certain Sri Lankans who first went to foreign countries, worked a couple of years, gathered a little bit of money, and started up businesses. Two engineers who just passed out from Mother University, they went to Middle East countries, worked there a couple of years, came back to Sri Lanka and purchased a failed company. But with their technical know-how, they revamped the company. They settled the bank loans, and today in Panagoda Industrial Estate, there's a company called EMP, Electrometal Pressing Company. Okay, so they started up with their own money. How do you find your own money? By working somewhere. Next is family and friends. There are rich families where the father or mother will hand over money to start up business. Akio Morita started up Sony company with the team like Ibuka. Akio Morita is coming from a rich family. His father gave him money to start up this business. So Akio Morita and his team developed a project proposal and they named it as prospectus and handed over to his father to evaluate. Anyway, father gave him money. So that is another source of obtaining money from for your small businesses. Banks are there. Banks will evaluate many factors and definitely the two I mentioned. Whether you have already taken loans and settled, how is your CRIP report? What are your assets? Are you having enough assets? So let me tell you a story on banks a little bit later. Small business loans. Then there may be small business loans. Sometimes the government want to help the small business people. From time to time, we have seen under different names, small business loans, maybe by governments or through funding agents, the banks will manage that. There are credit lines all of a sudden, maybe from JICA or from India. These credit lines want to help small businesses, but they are mostly channeled through banks. Personal loans. Whenever you want to take a loan, the bank will first ask, what is the purpose? When we looked at Campari, purpose was there. Bank will definitely ask you, what is the purpose? When you say, I want to start up a business, then project proposal and many other documents you have to submit. The only loan the bank is not asking why is personal loan. So you can have different reasons. Maybe you want to get married, you need money for that. Maybe you want to buy a motorbike or a car, anything. Maybe you want to go on a foreign trip. Personal loans. Trade credit. Yeah, there are trade associations. Now comes private equity firms. There are private equity firms who will take a share of the equity or the capital. So you will be owner, the other party will be owner. Private equity firms. Next, venture capital. That's what we are looking at. That's a business, a well-known businessman who owns Virgin Group, Richard Branson. Richard Branson always started a business from the scratch. He never acquired a company. Contrast to that, if you think about in Sri Lanka, say Dhammika Pella, he always acquired businesses. He always acquired other companies. That is one mechanism. So Richard Branson always started businesses from the scratch. And he continued grooming these businesses. When he grew old, he knew there are a lot of new ideas among young people. Okay. But I'm old. I don't get the same ideas. So he started Virgin Venture Capital. Now the young people who have new ideas, who think I can convert into new companies, can send project proposals for this venture capital company. Okay. Now, there was an employee of Virgin Group, and he finally became CEO of one of his companies. Later, he said, I want to retire and I want to go back to my country. That's Australia. And I want to live with my family. He was a young person. Richard Branson said, okay, when you go back to Australia, what do you want to do? He jokingly said, like you, I want to have a airline business. Richard Branson thought seriously and said, okay, fine, send a project proposal to Virgin Venture Capital. Now this person went to Australia and sent a project proposal to Virgin Venture Capital. After a few months, all of a sudden, Richard Branson remembered one of my employees resigned and he went to Australia, and this was my last discussion. He took his number and said, okay, I didn't see your project. What has happened? Then this young person said, okay, sir, I have sent the project proposal and your Virgin Blue, sorry, uh, Virgin Venture Capital has rejected it. Normally, the Virgin Venture Capital is managed by a professional team, and Richard Branson is not always get involved into these activities. Richard is known as Mr. Yes. He always find any project proposal as yes. But the professionals, they evaluate and okay very few project proposals. Richard Branson asked okay from the team, have you got a project proposal from this particular person? They said yes, and we turned it down. Why? It's not commercially viable. Then Richard Branson got the plan, he read it and said, okay, I approve this much of money. Very next day, a phone call came from the bank of this person and said, 125 million deposited in your account. Is it by mistake or any reason? Then he said, okay, I have applied a loan from Richard Branson from his venture capital company. Maybe they have sent me money. And he started Virgin Blue in Australia, which became a leading domestic airline. So that's venture capital. Okay? So venture capital need not to be only for very small businesses, even to start up aeroplane, domestic airline, aeroplane service with maybe 10, 12 Boeing aeroplanes. That also can be part of venture capital funded project. So this is Virgin Blue is one example. Okay, so we are moving into that. Now crowdfunding. This is another option. Okay. Crowdfunding means a crowd get together. A crowd get together and give you money. As an individual, you may have little money, but if there is a collective team, they can accumulate a good capital. Venture capital is by one individual who has enough money and hand over that money for the business person. Crowdfunding is a crowd, a large number of individuals put their money collectively and hand over money to start up a business. That is crowdfunding. Okay, so these are the sources of funding small businesses, handing over money for small businesses. Now, once again, I'm asking you. Now, you know the sources. If you want to start up a business in Sri Lanka, now you know so many sources. What will work out for you? Just send me your answer in the chat box. You want to start up a business in Sri Lanka. Now you know crowdfunding, venture capital, okay, private equity. You know so many nice names. Tell me what will work out for you. In the chat box, you can send me banks, personal loans, on capital, small business loans, banks. Okay, right, fine, good. Okay. Okay. Venture capital, is it popular in Sri Lanka? Have you met individuals who said, okay, I started up this company thanks to venture capital? Have you met such people? Say yes or no. No, no. So venture capital is not a popular instrument, financial instrument in Sri Lanka. The venture capital, hereafter VC means venture capital. The VC makes its money by owning a piece of the company. Means what? Now, Someone else is giving you money for your dream company. When they are handing over money, they will take a piece of your company, that is ownership, and typically selling it for more money than it bought it for. Okay. So Richard Branson, he invested in Venture Blue Airline of Australia. After starting, within 1 year, they could beat Ansett, the leading domestic airline. The leading domestic airline came up with a proposal. We will buy your company entirely. And Richard Branson found within 1 year 125% return by selling the ownership. Now, this is what happened. Sometimes the company that you started up will be purchased by someone else at an amazing amount. You may start up WhatsApp and sell it to Facebook. Okay. In Sri Lanka, let's say a company, a toffee company. Can someone tell me the toffee company which was purchased by Dainty? Dainty. So Dainty is a company, and later on they sold it to Amas. Means what? Companies ownership can be sold. There was a lady, Otara Chandiram. She started Odell and sold it for billions to Softlogic. So you can sell your ownership. Now, venture capital, that is angel investor, they put their money. They are not the initiators, but they will be honest because they put their money. Their ownership, later they can sell it in the market. Bank loan is well a loan. It is a transaction involving debt that is provided an interest rate, which is how the bank makes money. They are very different financing options. Okay. Now, can you just tell me what are the differences you see between a bank loan and a loan you take from a friend? Now, this one, venture capital, it's like taking a loan from an individual party. Okay. What are the differences you will find? Now, if you take a bank loan, there's a very standard format. They will charge you interest. Definitely there is interest. Whether your company is making profit or loss, you have to honor this payment. So there will be rentals that you have to pay whether you are making profit or not. But venture capital, here comes a rich person, he invests your company. If the company fails, what will happen? Let's assume a very rich person invest in your dream social network and your dream social network fails. You fail to make money. What happened to this business person? He will not be able to recover a single cent. Means what? Angel investors are undertaking very high risk than commercial banks. Okay. Now, if venture capital is undertaking very high risk, what is their return? Will it be high or low? You know the dictum. Venture capital companies are undertaking very high risk, very good. So they expect very high return. If I undertake high risk, I must expect very high return. Okay. So remember, there is nothing wrong at taking loans at a very high interest rate as long as your return is high. Okay. Now, venture capital companies, if they are not started, the owner will not be able to ensure a steady revenue, a higher profit. Okay. Now, just tell me some industries that you think you can make extremely high return for your investment? Just think quickly and tell me certain industries where you think you can make very high return for your investment. Okay, very good. Let's discuss one by one. Bakery items. There is a statement, if you put 1 rupee into the kitchen, it must appear on a plate as 3 rupees. Okay, so if you are putting 1 rupee to the kitchen, it must appear on the plate as 3 rupees. Okay. So that's bakery business. Yes, it's a profitable one. Right. Then you talked about land. You're waiting for capital appreciation. Then you think about construction related apartments. Yes. Hotels are profitable, but you also undertook the risk as well. Okay. Right. But these industries will give you profit, no doubt. But tell me the places where real capital, real competitive edge. Let's say I start up a bakery. Tomorrow you will start up a bakery next to me. Okay. And very naturally, we will have competitive prices very soon. Our profit will erode. That has happened. Tell me products where you can take a very good patent and make profit. Now, share market is a place you can make profit, yes. But now I'm asking you businesses, right? Gold and share market, you can make profit, but they are not businesses. Okay, they are investments, correct. But I'm asking you businesses, yeah, that's very good. Software developing, okay. Software developing, definitely you can run into huge returns. Tell me one thing. Think about our era. Medicine, very good. That's what I was expecting. Okay. Think about any patent right for COVID-19 vaccine. Right? Those who can get it will very soon find what? Amazing profit. Okay. Right. Sometimes the profit margin is more than 1,000. Okay. And maybe for 5 years, you only can produce the same format. Okay. You are given a patent right. Right. So these are high profitable ventures. At the same time, remember, they are very risky businesses. I'm developing a software. If I fail, I have not created any tangible asset. I'm trying to develop a medicine, but what is the assurance that I can really come up with? Okay? Think about the COVID-19 situation. WHO has not so far approved any of these vaccines. They approved certain, I'm not saying any of the certain vaccines. They okay to recommended, considering the current situation, it's better to have a vaccine than to see the number of deaths going up. But it was not following the proper procedures. Right? At the same time, we still do not see 100% reliability from any of these vaccines. So the so-called 90%, 95% successful rated vaccines have shown they have failed to prevent death of certain individuals. So that is not the case with many other medicines. Means what? Still we were not having enough researchable time. Okay, right. So these industries, what you said, software, medicine, extremely high return, extremely high risk. Okay. So if bank gives money they will charge you interest rate whether you are making profit or not. If a venture capitalist give you money, if you fail, he will get nothing. Angel investor. Okay, where do angels live? As per your knowledge, where do you find angels? Where do they live? Very good. They live in heaven. Okay, right. So angel investors, definitely, they are a set of people who looks like living in heaven. They are extremely rich due to various reasons. Maybe family heritage, maybe they have done businesses when they were young. Now they have enough money always flowing in, like for Richard Branson. Okay, so such people. Okay, what has happened? Okay, so such people. Okay, so such people will undertake extreme risk. An angel investor is a person who invests in a new or small business venture, providing capital for startup or expansion. Angel investors are typically individuals who have spare cash. Okay, so that's their excess money. Okay, spare cash available and looking for a higher rate of return than would be given by more traditional investments. Okay, so there are people who have excess money and they don't want to put that money into traditional investments. So what are the traditional investments? That's what you said. Fixed deposits, gold, share market. They are traditional investments. Okay. Here comes something uncommon. New business ideas. You will not always come up with new business ideas. And you want to fund them. These people who have new ideas, they need money. So what will you do? You will hand over them money to start up their dream products. So they almost like angels. Angels are coming from heaven and helping you. Okay. Now let's think about new concepts among young people. I have met few YouTubers who earn money by their own channels. Sometimes they earn a very good continuous cash flow. What have they done? They have undertaken new business ventures and they have invested a little bit. To the amount they have invested, they are getting a return. Okay. Now, do you think that all the YouTubers in Sri Lanka are earning enough money? Say yes or no. No. I have seen many startup, but failed. So that remains in the space. Okay. So they start up, but after some time, they give up. But there are few YouTubers who got good funding sources as well as good mentors. So they have found angel investors. One individual, he has started up a YouTube channel just to show his guitar music. So this is a person, young person, who can play guitar very well. So he has started up a channel showing his skill of guitar mastery. Right. So when you log on to his YouTube channel, you can listen to many single songs, but the number of views were very few. Right? He's a very good guitar player, and you can listen to very sweet melodies, but the number of viewers were very few. Okay. One day he met a old person, a rich, wealthy old person. When they were having a discussion, maybe they were family friends. When they were having discussion, this old person asked him, "Okay, son, what are you doing now?" He said, "I'm running a YouTube channel." Okay. Then this old person has asked, "Okay, what are you showing?" He said, "Okay, that's my hobby. I'm really good at playing guitar, and I show them in the channel." Then this wealthy person asked, "Have you ever made a single cent out of your channel?" He said, "No." Right. Then this wealthy person asked, "Can I have a look at your channel?" Then he opened up his lap and showed his YouTube. The old man, the wealthy person, let's say angel investor hereafter, okay. Now this angel investor asked from him, "Okay, tell me a reason why should I watch your YouTube? What am I getting out of this? You are a very good, talented person, no doubt about that. And you are enjoying yourself by playing guitar, fine, good. Why should I watch that?" Then he said, "Okay, I'll invest in you. I will invest in you. And I will invest in good cameras, certain softwares where you can, okay, I'll tell why, and some other clothes of you, and we'll share the profit." Okay. Now what is happening? There is a young person who is having talent. There is an old person who is having money. They join together. That is what is happening under venture capital. The young person, though he is having talent, he do not know how to market it. This wealthy person, he is not having that particular talent, know-how, technical know-how, but he know how to market. Means what? Angel investors not only give you money, they will involve in your activities. That is not how a bank is running business. A bank will get your project proposal, read it, either give the loan or reject it. Bank is not involving in your management activities. Okay. Now this wealthy person says, "Son, look here. If there is a reason for a person to spend data and spend time and watch your YouTubes, watch your movies, video clips, there must be a reason. People only get motivated by one factor. What is in it for me? What do I get out of watching your channel?" Very simple as that. Son, I don't get anything by appreciating your talent. So I may once watch your YouTube, after that I may not. This is why you don't have much views. Okay. Entertainment is something, yes, everyone needs entertainment. For that, in Sri Lanka, people move mostly to jokes. So there are enough of such websites, such YouTubes, and it's very competitive. Next, people or the ladies will look, most of the time they have enough time, and they will use the data to watch how to cook recipes. There are enough channels and they are earning perfectly well, and the competition is extremely high there. You are into guitar, right? There are enough musicians. Tell me a reason why should I watch? So you start up lessons. Okay. So what happened? You will get a market segment. This segment will want to know uh, how to play a guitar, how to play this particular song, how to play this music sheet. Now you can convert your web, your YouTube into that. In addition to that, today people are using lot of tabs instead of notations, but these tabs must be in international standard. You must take computer printouts, right? Then there must be camera set, sound system, your clothes, how you appear, everything matters. I'll spend, we'll share profit. Means what? This is what venture capitalists are doing. They don't have talent. They don't have know-how of that, but they know how to manage a business. Right? Then he clearly said, okay, there are enough strumming pattern related websites, but where if you want lead, so especially in Sri Lanka, so you target that. So you have market segmenting, you know who they are, okay. At the same time, remember, once you ground yourself perfectly when in Sri Lankan base, move out international. Okay? YouTube, internet is borderless. There is no specific border. Most of the time, Sri Lankans produce products to Sri Lanka. Look at the name of the products. Okay, I'll tell you one simple example. Akio Morita started a company with a team of Japanese engineers. So they named this company Tokyo Kyushin Koishi Kabushi Kaisha, a very long Japanese name. And they were producing a lot of electronic items. And they understood one thing, Japan is not the market. Though Japan those days was growing 10% plus GDP continuously, they knew Japan is not the market. So Akio Morita is the only English-speaking guy among this Japanese team. He went to USA to study the market potential. The Japanese, those days, when they move out everywhere, they take a notebook and note down everything which they think I must copy. So Japanese always learn by copying. He came back to Japan and said, look here, number one, we must change our brand name. Tokyo, Toishin, Kyoishi, Kabusha, no one will read out except in Japan. So we had to have a name which is very simple, maybe 3-4 English letters. Benz, just 4 English letters. So they finally agreed on Sony, S-O-N-Y, Sony. Okay. Now, means what? If you want to go to international market, you have to look into all these details. Think about Siddhalepa. Do you think many Western people can pronounce it properly? No. Okay. So the wealthy investors, they know these, not just money, with their experience. They are mostly all people with enough money, excess money. They know about the market. Okay. So they will come up with knowledge plus capital and come up with profit sharing. Okay. So that's, here we were, angel investors. Yeah. Look at these two. Mike Makula of Apple. What is the name comes to your mind the moment you hear Apple computers? Quick. What is the answer? What comes to your mind the moment I say Apple phones or Apple computers? Name of an individual? Steve Jobs. Good. Steve Jobs is the person who started Apple. He could have never started Apple if not Mike Makula. So Steve is the innovator, Mike Makula is the investor. Okay. One very good example for angel investors is Mike Makula. Let's look at him. Okay. Second CEO of Apple. Means what? These angel investors hand over money and involve in day-to-day management activities. When a bank hand over you money under leasing agreement to have a school van, bank is not, none of the bankers are sitting next to the drive of the school van and checking how he's managing this business, how he's collecting money, how he's driving. No, bank is not interested. But if the same is purchased under venture capital agreement, remember when you are driving, next will be in the next seat, adjoining seat, you will find your investor is seated. Second CEO, something similar. Means what? They involve in day-to-day activities of the business, right? They are not just putting money. They put their time, effort, and knowledge as well. Mike Makula is not definitely not having the superior genius knowledge of Steve Jobs, but he has a part to contribute. In our example, the angel investor is not a guitarist. He can't play a guitar, but he knows how to make profit out of any venture. Why? Because that's what he was doing when he was young, starting up businesses. Now he has enough capital, excess capital. He's ready to share this excess capital with the young person, but not to waste his excess capital. Okay. Now I'll tell you one simple example why angel investors involve in day-to-day management activities. Once there was a Sri Lankan who said, okay, now remember, my dear, Sri Lanka is a superb country where you can immediately become popular thanks to media. You don't want anything but some connection with media, and you will immediately a superhero. Okay. Now think about the products Sri Lankans have produced within this couple of years, or maybe within one decade, thanks to media. Sri Lanka has produced fuel out of polythene, thanks to Mr. Champika Ranavakadevi. Okay, are we using them? There was a guy who said, I can run a vehicle by using water during the former regime of Mahinda Rajapaksa. Are we running vehicles with water in Sri Lanka? Then during this regime, there was a guy well ahead of all these vaccines, came up with a magic potion, Dhammika Paniya, a superb product. I think those days, the media, as the Facebook, they said, okay, Sri Lanka can settle all these loans thanks to this Dhammika Paniya. They thought, okay, we'll have the patent right and the world will come behind us. My dear, Sri Lanka is a very nice place where all of a sudden someone can fool the entire nation. All of a sudden, a gem, huge size gem is found. And now Sri Lanka is happy. 200 million US dollars now we are going to settle. Superb. Right? So that's us. Easy to fool nation. Right? On such, I'll tell you this example. There was a person who said, I can show you how to run vehicles by using H2O as the energy source, water. And he even went to temple trees to exhibit that. Next, a Sri Lankan business guy gave him money to start up it commercially without evaluating. Okay, so one those days we had a very good Sri Lankan business guy. By that time he was very old and he had enough sources of cash coming into his businesses. He owned banks, finance companies, almost everything. And he funded this project. The person who said, I can do that, took the money and went away. Now that's what is happening. If you don't involving day-to-day management, he would come up with a project proposal and say, okay, I need 500 million. You take the 500 million and vanish. Okay. But here, if you need 500 million, fine. For what purpose? I want to buy computers at what price? 500,000. How many? 5 computers. Okay, let's go together to Majestic City or Unity Plaza or Soft Logic, buy computers. I'll come along with you. Means what? You can't play out me. I'm involving in your day-to-day management. That's angel investment. Okay. So angel investor of Apple became the second CEO. I'm asking you another question. Where is the second CEO of Apple now? Can someone tell me an answer? Why is the second CEO, Mike Makula, of Apple now? Okay. Now remember, these angel investors do not come to remain in business. Steve Jobs comes to remain in business and run the business forever. That is not the expectation of angel investor. Angel investor wants to give you money, involve in management, run the business very successfully, and sell the business. They don't want to remain in the business. It is said, if Mike Makula never sold his stake in the share market, he would have become the world's richest man. But angel investors are not that patient type. They want to sell out their stake maybe within 3 to 5 years. So they always enter with exit plan. Okay. Now differences between lending and venture capital. Lenders have a legal right to interest on a loan and repayment of the capital, irrespective of the success or failure of a business. That's what banks are doing. Banks are giving you loans, debts. Debts means what? Whether you make profit or not, you have to honor your commitment. If you can't do that, they have asset to sell and recover their money. That's what debt lending. But that is not the way capital works. Venture capital is invested in exchange of an equity. Okay, venture capital, I will invest, will form a company. You are the guitarist. I don't know how to play a guitar, but I have money. We'll form a company. Now this company will own this YouTube. Okay, so we'll have a profit sharing agreement, 50-50 or 30-60. Most of the time, the innovator gets majority because it's his talent. But the venture capitalist also take a considerable portion of the total capital, out of the total capital. As a shareholder, the venture capital's return is dependent on the growth and profitability of the business. Yes, right. Now, there is a guitarist, there is an investor. Guitarist know only how to play. He's talented in playing guitar, that's all. But he is not having equipments, no proper cameras, no proper guitars, no proper computers, no proper studios to record his playing. Now that's where money is required. In addition to that, guitarists only know how to play guitar. He's not having a knowledge how to market. Okay? You must know how to market a product. I told you about Sony. They changed their name. If they fail to change their name, they could not have captured the market they captured. Okay, very simple thing. Your brand name matters a lot. I'll tell you another nice example. The French people, they love their language so much that they always come up with French names as brands. Contrast to that, Japanese, they come up with a name that can be easily pronounced, not a Japanese name. Okay, it's not Tokyo Tuition Koishi Kabusha we are purchasing. We are purchasing Sony. Right? Once in Sri Lanka, there was an advertisement on a jam product. So the advertisement was in Sinhala. And it said, Nama kiyanna bැරි වුණත් හරිම අපූරුයි Clementi de Jacques, a French jam, Clementi de Jacques. And what the advertisement says, even if you can't pronounce the brand name, it's a sweet jam. My dear, if you can't pronounce the brand name, how can you go to the shop and say, I want this particular jam? Okay. So you have to look into marketing aspects. Right? So angel investors come with a wealth of money, wealth of knowledge, and involved in day-to-day management activities. Okay. Now, one problem in Sri Lanka, when Dhammika Panier was introduced, Dhammika became a superhero in media, and immediately the ministry of whatever the ministry, they said, okay, we are giving him a machine and now he can, we are investing on his machinery. Why? this angel investor called ministry or the minister is not having wealth of knowledge. Now Dhammika is having know-how, how to make this magic potion, right? But the minister or the ministry or the people who are going to invest in him should know how to market the product. First, number one, check it feasibility, technical feasibility. Can you really solve the problem? Okay, there comes a guitarist like Dhammika. He know only how to play the guitar. Fine. What is he need for me? Right? Now the angel investors argue with him. Nobody wants to appreciate you other than your close friends. The world is not wanting to appreciate you unless you are a genius. But everyone wants a piece out of what you have. You have a know-how and everyone wants a piece of your know-how. So sell it. Okay? So you become a guitar tutor online to everyone, not an individual one. Okay? And now they are making money. Okay, so the first difference is if it's a debt instrument, if the money is given by bank, irrespective of profit or loss, you must pay your rentals sharp on time. Venture capital, only if you make profits, you can settle your loans. Yeah. Exit strategy. Right. The venture capital always invest with the exit plan. Now, what is the exit plan? Okay. Now, there is a guitarist, there is an investor. Investor invest in guitar, a studio, right? A recording studio, set of computers, set of amplifiers, a place, all these things. After 3-4 years, this angel investor is no more interested in this business. He want to get out, right? When he want to get out, the guitarist will remain in this YouTube. The general public only knows him. Steve Jobs is only, general public only knows Steve Jobs of Apple, not Mike Makula. The same way, after 3-4 years, when this YouTuber is making enough money, the angel investor want to exit. I want to get out. So how do I get out? Because of my capital, you have a superb guitar, a studio, these assets. And I don't want any of these assets. I invested, let's say, 2 million to you. I want 10 million after 3 years. That's all what I need in addition to the interest rate and the management fee which I charge from you. Right? Now, how do I get this 10 million? By selling this capital. Now, what is the capital? It is not the guitar. It is not the computer. It is not the studio. But the ability to make this much of money per annum. That is the business. That business I want to sell. Who will buy this business? Think and tell me. Who will buy this business? Okay. So if it's a big business like Apple, what Mike Makula did is he got out of the company by selling his stake to the general public. So that is the easiest way, right? I want to sell my ownership to general public. How do you sell ownership to general public? How do you sell the ownership of your business to general public? By issuing shares, very good. Share market, yes. By an IPO, initial public offering. That's where the angel investors get out of the market. So they have exit plan. Right. Now I am asking you a question. The first question I already asked, I asked you whether venture capital is a popular financial product in Sri Lanka. You said no. Very good. My second question is why? Venture capital is not a popular financial product in Sri Lanka. Why? Tell me reasons. Why do you think venture capital is not popular in Sri Lanka? Okay, do you think that we Sri Lankans are not undertaking enough risk? You said high risk. Yes, venture capital is a risky business. I believe living in Sri Lanka is extremely higher than living in any other country, maybe other than few underdeveloped African countries. Now, when you say no investors, I would say in Sri Lanka you will find to our capacity there are enough investors. During last 6-7 months, Colombo Stock Exchange daily turnover was more than 2 billion Sri Lankan rupees. Very recently, RC Surgical Hospitals, shares owned by a foreign party, was sold, and it was purely absorbed by Sri Lankans. Remember, maybe within last 3-4 years, we continuously see foreigners getting out of Colombo Stock Exchange. Foreigners are always net sellers continuously. This is one reason to depreciate Sri Lankan rupee. Foreigners are getting out of Sri Lanka. But remember, Colombo Stock Exchange was moving upward. Why? There were enough local investors buying their shares. Okay. So lack of investors, I don't accept. Risk, I don't accept. The rest of the reasons you mentioned, let's say lack of discipline. People don't want to go for the exit plan rather than continue. Okay, think about Otara Chandidam. Odell, a superb company, but she exit. Okay. People reluctant to invest on new products. Yeah, yeah, that's there. Throughout the world, it's there. Okay, remember, you don't have too many angel investors anywhere. Majority prefers comfortable life. Fear to exit after succeed? No. Uh, if you have invested, when you get a good return, you find, okay, I'll exit and move into another company rather than remaining in a stagnant company. Okay? Right. So out of the reasons you mentioned, one thing which I accept, we don't have a developed capital market. Okay? When you don't have a developed capital market, even if you want to exit, you can't exit. Okay? Now we find Jet Holdings, okay, Prime Residencies, okay, then Windforce. They were the recent IPOs. Last week, one of the biggest debentures, 10 billion debenture, was fully subscribed, oversubscribed, and the debenture issue was People's Leasing Company. Means what? We can't say we don't have capital here, right? So money is a concept. We don't. Okay, I don't see much lacking in that. Okay, so even now the market is highly liquid. What we lack is a developed capital market. And as you said, good financial literacy. Yes, people do not know what is venture capital concept. Very good. That's there. So people should be educated on these new financial products. Now, we don't have well-established venture capital companies in Sri Lanka. That's another issue. In UK, you have Venture Blue, Virgin Venture. They are venture capital companies. If you go to Israel, they are very much known for venture capital. In US, okay, in all these developed nations, you will find a lot of venture capital firms are there. Not only individuals, but even firms are there. Okay, so there are steps to improve on venture capital. Now, as I said, Dhammika Kapela once mentioned, Apple's 1 quarter profit is higher than our own GDP. Right? Now, you can see how Apple started. Apple was started not because of a bank, but because of angel investors. Okay? If not, it's only a concept. There are so many such concepts. Once there was a person, uh, Chester Carlson. Chester Carlson worked, yeah, as a electric engineer, and he mastered this subject. He came up with the proposal. Yeah, he was working under Dr. Edwin D. Land of Kodak. He went to his master and said, "So I have a concept. What is that? I can develop a product where I can take photocopies." Sorry, those days you don't say photocopies. I can say take copies. He was working in Kodak, the photography company, and he was an engineer. He came up with a nice product concept that is what you call photocopy today. He said, okay, so I have a concept. If you make this through a box, if you put lights, and when you take out papers, you will find prints on that. And I call it a photocopy. Shall we produce it? But Dr. Edwin D. Land, the wealthy investor, owner of Kodak, rejected it. So this person, Chester Carlson, he worked in different places. He went to 20 big companies in UK, US. They all rejected his proposal. Finally, he started world first photocopy machine, Xerox, by himself with the assistance of an angel investor. Okay, so this is what is happening. You have idea, and you find it extremely difficult to sell this idea. Therefore, you have to wait until someone accepts you. Right, now we are talking about the exit. The sale of shares to the company's principals is a common exit strategy. Okay, now we were talking about a simple example. There is a wealthy investor and the guitarist. And now what are the assets they have finally purchased? Few set of guitars, a studio, recording studio, amplifiers, then computers, mics, these assets. I want to exit. Say I'm the investor. I want to exit, but I don't want any of these assets. So what do I want to do? The sale of shares to the company's principal. Now the principal is this guitarist. It's a common exit strategy. Okay, can you buy them? The sale or merge of the company is a common exit strategy for debt holding investors. Right? If he says, okay, I can't buy it, then we'll go and list it in Colombo Stock Exchange. Then I can take my amount, selling my ownership to the general public, and that's it. So I'm getting out. Right. When you get money under venture capital, what do you get? You get capital. We call it equity. So there's a difference between debt and equity. Debt financing means the owner is giving money. Okay? And debt financing means the bank is giving money. When the bank is giving money, they charge an interest rate. Equity means owner is giving money. When owner is putting money, he is not charging interest himself because it's his money. Instead, he wants profit, a share of profit. Debt financing involves in borrowing a fixed sum from a lender, which is then paid back with interest. I take your money and I have to pay that with interest. Equity financing is the sale of percentage of business to an investor in exchange of capital. Okay, I will invest, will form a company, and the company will buy this guitar, recording studio, these things, and the company will own it. Okay, and the company, I being the investor, I'll get a stake of this company. I will own 30%. Let the guitarist own 60%, something like that. There is arrangement, which we will commonly agree. Debt versus equity. Conditions, management influence, debt. Okay, Mike Makula, second CEO, means what? Mike Makula gives money and have management rights. Bank gives money, no ownership or management influence. Okay, so bank is not coming to your business and involving in your business activities. That's not the duty of the bank. Bank is only giving you money and recovery. Repayment. If I have taken a debt, bank loan, debt has maturity date. Yes. Within 4 years, I have to settle by 48 monthly rentals. There's a maturity. Each month on 25th, I have to pay you. That's my repayment. Equity. No, there is no maturity date. So the repayment, okay, there is no maturity date. As long as the business is there, until the business is liquidated, capital is there. Yearly obligations, yes. Under debt, annually, I must pay the interest. Per annum, I'm charged 10% interest. Equity, I'll give you money. There is no liability to pay dividends, no. Tax benefits, interest is tax deductible. Dividends are not tax deductible. So these are the differences between debt and equity. Now, how do you meet an angel investor? Have you ever seen a movie called Steve Jobs? That's a movie. My dear, there are enough good movies on autobiographies about Steve Jobs, about Ray Kroc of McDonald's, about Mark Zuckerberg of Facebook. There are enough films, movies made. Have you seen any movie on Steve Jobs? Say yes or no. Yeah, we learn a lot through movies because movies show so many aspects, so many angles of an individual. Okay, right. Okay, in your free time, search and find any good movie on Steve Jobs there. And in one movie, Steve Jobs goes to an investors symposium. So in US, like in our tuition class, let's say not a big class, a group class, there is a speaker. So you call him lecturer. And there are about 10, 20 students sitting in the same, something similar, investors symposium. Now, there are set of idea owners in one side, set of investors in the other side. So these idea owners, young people, go to the microphone and spell out their plans. Okay, this is what I want to produce and I want this much of initial capital and this is my business plan. He spell out. Then the investors ask questions and finally they are satisfied. They'll have individual chat and start up business. Steve Jobs goes to a investor symposium. He makes his presentation. It seems no one is interested. He comes out. Mike Makula follows him. And they had a corridor discussion. That's how they started Apple. Right? So what is happening? I want to find an angel investor. How do I do that? Meeting angel investors, references from investors' trusted sources. Okay. So Mike Makula is a wealthy, rich person. Then someone should say him. There is a guy called Steve Jobs. I think he has something worth. Let's go and see him. Other business contacts or investor conference and symposiums. That's where Steve Jobs meet Mike Makula, investor symposium. Right. So there is a conference. And those who have ideas, young people, they are given chance to present. And the investors are listening. If the investors are happy with your idea, then they will pick it. Now just imagine when Dhammika Paniya came, if there was angel, this kind of investor symposium, where Dhammika would come up and talk about his product and the possible investors Ask him questions. Okay. What is your successful rate? How do you test the success? Can we sell it in other countries? How do you get patent rights? What are your ingredients? Okay, how do you continuously obtain these ingredients? If you say, okay, I'm using eagle's eggs, okay, do you have eagle farm? Because we are going to commercially produce it. Okay, bee honey, original, okay. Do you have access? We are going to sell it to at least 20 million people in Sri Lanka, plus 8 billion population in the world. Do you have enough access to bee honey? Or are you using chemicals? So you're asking questions, right? That's what is happening in the investor symposium. Right? In Sri Lanka, one terrible situation is when such a person emerge, no one asks question. Okay? Even when the emperor goes naked, it's a kid who, who really spell it out, who really shouted. Okay? So let it happen to anyone. So there must be investors symposiums. Let the idea owner come up and face the questions from the commercial owners. Let it be there. Okay. Qualities of qualities venture capitalists seek: solid business plan. Okay. Good management team. Let's look, just think about these two: solid business plan and good team. Right. Number one, think about Dhammika Paniya. When he came and revealed himself in the media, do you think he had a very good business plan, solid business plan? Definitely no. Fine. Number two, good management team. Do you think he was having a good management team? This is one problem with us. We always believe in individual capacity. Okay. There comes one individual president, he can do everything. So the presidents believe they don't want a team. Think about a business guy. We believe he can do everything. But look here. These are the aspects evaluated. You have a solid business plan, good management team who is going to run your business. Now in Sri Lanka, we believe Dhammika individually know it. Dhammika will not ever reveal his recipe fine, and Dhammika will do it himself. He don't want much employees. Okay. Who is his second in command? No, we don't want. That's one problem with ourselves. This is how we vote as well. When it comes to election, do they come with a solid development plan, action plan? No, we don't. Do they reveal a good management team? Okay, when I become the president, this is Mr. XYZ going to be the governor of central bank. Do they declare that? When I become the president, this is going to be my finance minister, Mr. PQR. Are they declaring that? No. Now, this is a problem with us. We don't have plans, we don't have good management teams, and we believe in individual capacities. Okay. Investment and passion from founders. Right. Passion of the founder. There are people with passion. The guitarist, he has a passion for guitar. That's why he started up. Okay. So even it's not making profit, still he would play guitar. That's the passion. A good potential to exit the investment before the end of their funding cycle. Okay. Venture capital don't want to remain in the business. I want to get out. Can I get out of the business at a super profit and within 3 to 4 years? That's another one. Target minimum return in excess of 40% per year. Okay. I'm not comparing myself with bank interest. The bank is giving 5% for fixed deposit. I'm happy with 7%. No, I don't want to compare myself with the bank, because what I do is different from a bank. Bank is not undertaking the risk which I'm undertaking. Therefore, I need 40% return per annum, which is extremely high, which I agree. But why? Because I'm undertaking that risk. If not, I need not to be in this venture capital business. Okay. So these are the things venture capitalists are looking at. Good management team. Let's take few minutes to discuss on good management team. Last week, there was a very good article in Sunday Times. They talked about finance ministers in different countries and their qualifications. In America, when Joe Biden became the president, he appointed Janet Yellen, a lady, as finance minister. Thanks to the Constitution America, you need not to be a member of the legislature to become finance minister. So Janet Yellen is not a politician. She was the former president of Federal Reserves, and she has enough banking experience. She's an economist, so she was appointed to finance minister of USA. In UK, a Punjabi, English Punjabi lady is the finance minister. In Japan, once again, a PhD holder is the finance minister. In Pakistan, similarly, a PhD holder is the finance minister. And this article runs on. In USA, the finance minister is a Jew lady. The Jews are less than 5% of the population of US. In Japan, the finance minister is a Catholic, which is less than 1% out of the population. In UK, a Punjabi, an Indian lady, is the finance minister. Okay. She's anyway English, but an England Indian, okay, a minority. Okay. Means what? They only look at qualifications when you look into your management team. When it comes to Sri Lanka, most of the time we find in businesses, I'm only talking about businesses, my dear, here, we find family members are part of your management team. Okay. Now, I have seen many good businesses grooming up and failing in small and medium scale businesses in Sri Lanka. Okay. Now, there was a very good bus customer of ours. He owned one bus and he was a hard worker. Within a couple of years, he moved his business to 10 buses. He was a bus driver, then the conductor of the same bus. Then he knew the income of particular route. Then he owned 10 buses. After owning 10 buses, he knew the income and the expenditure, everything. So he need not to be in the bus to run the business. So he has enough cash flowing in. Now he purchased a petrol shed and he handed over his son-in-law to run this petrol shed. Okay. Then he started up hotels, 2 hotels in Bolgod area. So they were given to his daughter to manage. Right. Then he thought he had high hopes on tourism. All of a sudden, 20 kdh. And that was the end of his. Right. He found none of his business ventures are performing well. Why? He's not having an accountant. Who is his accountant? Son-in-law. What is his qualification? Oliver. That's where they fail. You need good management team. Think about America. Okay. Think about Japan. Think about India. Okay. These characteristics are drawing us back. When I'm running a business, I don't have a solid business plan. And I don't have a management team other than my own family members. Okay? My only passion is money. So I can't run a business. So these are some other drawbacks to develop venture capital in Sri Lanka. Okay? We always pinpoint and finger out politicians, but look at the business people nearby. You will find the same characteristics. No plan, only relatives. And the relatives are robbing from you, and you don't mind because they are your own relatives. And finally, you find your entire business has collapsed. Okay? So that's where you look into these qualities venture capital seek. Characteristics of venture capital: high risk, high return. Okay. All the high risky products, unless they fail, will give you profit, a very high return. Okay, my dear, remember, when you say high risk, high return, it does not mean return is high. It really means your risk is high. Means what? Unless you fail, then only you will talk about return. That much risk is there. Okay? We always talk about successful stories, but how many venture capital firms have failed? Okay, how many venture capital new products have failed? Once, yeah, the new mobile phone was introduced, and I can't remember the company. Anyway, this new mobile phone was so good, even from the Mount Everest, a mountain climber could talk to his family. Right. So this mobile phone became, this is what they want to market. That was connected to satellites, and you can, even from top of Mount Everest, you can talk to your family members. But unfortunately, right, that was funded by an angel investor. When they went to sell out this mobile phone, they found you can't even take a call within a building. When you are within a building, you can't take a call. Very simple mistakes. Okay? So we can't always say higher the risk will always give you a high return. No, higher the risk means risk is high. Unless you become successful, you will not get anything. Illiquid means what? When I'm investing, I can't take my money back easily. There's a guitarist and the angel investor, the old angel investor is investing. Unless their website or the YouTube becomes so good, so profitable, and someone will purchase, till then, you don't have a value. You can't make, you can't sell these things, right? A guitar, a used guitar, that may be what you can sell. A used computer. Remember, these are not growing assets, they are depreciating assets. Okay. Long-term commitment. Venture capital, once you put money, maybe you have to wait for 7 years. Equity participation, as I mentioned earlier, guitarists get 50%, I will get 50%. Or the guitarist will get 30%, I will get 70%. There must be a equity participation. Innovative projects. The project must be innovative. Okay. Finding a vaccine for COVID-19. Okay. Once again, remember, everyone is going behind a vaccine. What about medicines? Maybe a tablet. Okay. For many other things, you get tablets. Why a vaccine? Okay, vaccines are good to prevent the public spread. But once you have contracted, you don't have medicine. Right? So if someone develop a tablet, so you have contracted COVID, but it's not an issue. You have a medicine. Here still, you don't have any medicine other than vitamin C. Right? So that's where you'll find enough innovations, enough innovative projects coming up. Participation in management. I told you that. Mike McCullough, second CEO of Apple. Why? Because he took part in Apple activities, management. Why do you want to do that? Okay, you are putting your hard-earned money, or your money, to unknown territories. And so-called managers can fool you. I want to buy companies. Okay, fine, let's go. I'll join you. Means what? I know in and out of the business which I'm investing. So I'm not a bank. I will involve in all these activities, professional and technical knowledge. Right. The old person who is investing in YouTuber, the guitarist, is having no knowledge of playing guitar. He can't do that. But he has a professional marketing knowledge. Let's segment the market. Let's look at why people watch your YouTube. What is in it for me? Unless they get a benefit, they don't want to spend or waste their time. If it's a joke, if it's certain amusing activities, entertainment, sheer entertainment, yes, there is a market. If not, there must be a reason to sell it. Okay. Let's segment the market. You are not talking about bass guitar. You are not talking about rhythm guitar. You're only looking into lead guitar. Once again, you are not into notations. You're only into tabs. So those who are in Sadhigama okay, that kind of tablature will not be your target market. You are into guitar tabs. Only that. Okay? But your market, like for Sony, must be universal, global market. Don't confine yourself to Sri Lanka. Therefore, look into other uh, YouTubers who are tutoring on guitars, internationally popular songs. Look into that. Sometimes they run about 13 million views, where your one runs about 7,000, 8,000 views, maximum 20,000 views. Why? Because you are looking only into Sri Lanka. Sri Lanka is not the market in internet. Like Sony decided, go out globally. If so, find most popular songs where people seek the notations, tabs, and show it in professional way. Then develop some other uh, website where you have notes and chords, and with a link, they can move into your YouTube. Okay, so the guitarist is not having that knowledge. He only knows how to play. The other old guy, he does not know how to play a guitar, but he knows everything other than that, which is relevant to sell this product. When they both get together, they are running a successful YouTube. Okay, so there's a professional and technical knowledge given by the venture capitalist. He's not having practical sense of what he's doing, what the other contributor is doing. The same with Apple. Mike Makula, he's an engineer, so he has a background. He had a marketing eye. On the other hand, it was Steve Jobs who was the innovator. When they both got together, they can run a very successful business. Next, funding stages. Okay. Now, first one is seed funding. Okay. Seed funding, low-level financing need to prove a new idea. Right. There comes a man and say, I can run a vehicle with water, H2O. Very good. And I need 500 million to run this commercial. Very good. Before giving you an 500 million, let's run a sample. Seed funding. Low-level financing needed to prove a new idea, often provided by angel investors. Okay, very small amount. Right. Now tell me, forget about this 500 million. I'm ready to pay you 500 million once you prove that you can do that. For that, bring me a glass of water bottle, a glass of water, or maybe gallon of water, right? And bring me a very low cost car. Okay? Now, show me how to run this car with water, only with water. I'm ready to run with you. Let you drive the vehicle. I'll be sitting next to you. Shall we go from here to Kataragama? On the way, we can request water from anyone and we'll run this. Let's see how much you need for that. Okay. If you can even hire a car, that's fine. So I'm ready to pay you the hiring fee plus water if needed. Right. So I'm ready to spend you 100,000. You need 500 million. Fine. I'm ready to do that. Prior to do that, I'm ready to spend 100,000 to check myself whether I am going to spend on a product that is accepted in the market, that is technically feasible. Okay. Someone would come and say, okay, I have a solution, Dhammika Paniya. Okay, even Ravana used that. Fine, very good. Let's take few drops in and let's go to, okay, and let's go to uh, India and show me how do you cure these people who are running on oxygen. Show me that. Once you show that, I'm ready to talk about your product. Till then, I'm not. For that, I'm ready to give you the air ticket to India. Just let's say 200,000 maximum to spend a little bit there as well. That's my seed capital. So if that is successful, then I'm ready to pay you more. Crowdfunding is also emerging as option for seed funding. Okay. Startup. Right. Now the first stage is fine. What is the first stage? Show me a piece of your guitar playing. Right. I want to see it in quality manner. Let's go to a studio. For studio recording, they may take maximum 10,000 rupees. I'm ready for that. And we'll even lend a guitar from them. Okay. I'm ready to pay more. Okay. 20,000 maximum. That's my seed funding. If that is the case, I'm ready to spend 2 million for your YouTube requirement. Seed funding means what? Even if I lose that, I don't mind. Startup. Okay. Now the first stage is successful. Now I have gone to Kathagam with a vehicle running on water. Fine. Now I'm okay. Next, I have seen your guitar. I'm okay with that. Okay. Now you have gone to India and cured the people who are running on oxygen and suffering from COVID. Thanks to that, now I'm ready to spend. Let's start up now the business. What is that? Right. Let's create a company. I'm ready to fund for that partially. Okay. And we'll do that. Now you need a studio. I'm going to rent out a building and convert into a studio where you will have enough soundproof mechanisms, microphones, good quality guitars, computers, everything is there. So I'm giving you money. That is the starting of growth. Right. Now your YouTube is views are going up. Now you have to move to somewhere else in a nice scenery. You want to play the guitar, and the recorded one we will use some software and get together, put it in. Now we are on growing. People prefer to see different types of guitars. Okay, now we have lava guitar, which is not made out of wood. So I'll pay you another 200,000, give you a new guitar. So I'm continuously spending on you while learning. Second round, working capital for early stage companies that are selling products but not yet turning profit. Okay. So I'm not still making profit. I have spent 1 million out of your YouTube views. Still, I'm not getting 1 million, but still I'm paying you. I'm ready to invest more. New types of clothes, new types of guitars. I'm ready to do that. Expansion, also called mezzanine financing. This is expansion money for a newly profitable company. Okay, now the company is making profit. Now I want to spend a little bit more. Exit. Now everyone knows about your YouTube channel that is making millions and everyone is talking about, and we have reached our target. I want to say goodbye. Either you purchase it from me, this is my value, or we'll talk with someone who is really interested in music business, maybe Yamaha, okay, maybe a world-renowned website. Let's sell it to them, okay. So that's the stages of venture capital. In simple, it's a mechanism of raising private equity for startup companies. Funding takes place after evaluation of projects. Funding sources, angel investor, and individual. Large insurance companies. Remember, large insurance companies also have excess money, so they can fund this kind of projects after much evaluation. Pension funds. We talked about Norwegian Petroleum Fund, which is a pension fund. There are such pension funds. Means what? When an employee starts up to work, say at the age of 20, he will work at least up to 55. So he is saving his money for 35 years. So there are funds, pension funds who can hand over their funds to a long-term investment. So you can see pension funds becoming funding sources for venture capital. Then there are venture capital companies. I told you about Virgin Blue, Virgin Venture. There are venture capital companies. They will invest. Just read it. Sir Richard Branson, after becoming the world's largest single individual owned company, and when he understood I'm old enough, he came up with Virgin Venture Company. So Branson licensed the Virgin name. Okay, whatever the company that comes under Virgin name. Something similar here happened with Selinco, right? Virgin name. And logo in exchange for the controlling interest. Okay. In Australia, that was Virgin Blue. Right. By now, Virgin brand is associating with more than 400 different companies. That's what you can do. So Richard Branson, unlike many other angel investors, sometimes prefer not to exit. Okay. Now we are comparing venture capital with a bank loan. You can see the comparison. Will provide finance for high-risk projects, venture capital. Banks, okay, not available if high-risk business idea, negative side is that. Okay, so banks are running with others' money, so they don't undertake high-risky businesses. Now, negative side of venture capital, interest rate is high. The positive side of bank loan is interest rate is low. Loss of control as have to give up a share of business. Okay, I am the guitarist. Now I have to give part of the ownership to a person who can't even play a guitar. I'm losing my control to him. That's the negative side. That's a positive side from the bank. When the bank, if they can give me a loan to have a musical recording center and few gadgets, they will not even come to listen to my music. So I'm really happy with that. That's one positive side of bank. They don't involve in management activities. Banks may be simpler and quicker to organize. Okay, now the positive side of venture capital risk, we said, benefit from experience and contacts of venture capitalists, may know the industry. That's there. Okay, he does not know how to play a guitar, but he has amazing knowledge on marketing, which he can apply, even though he's old, even though this YouTubing is new, he know how to penetrate through that. He has good contacts. He has good understanding of market. So that's the comparison between bank loans and venture capital. Crowdfunding. Okay. Can someone tell me who is Mr. Ashok Handagama? Who is Ashok Handagama in Sri Lanka? We were talking about Steve Jobs, Mike Makula. They were US. Now I'm asking about a Sri Lankan guy. Very good, thank you. A film director. Ashok Handagama ran few, there were very few movies from him. Yeah, few movies. What were they? Right, whatever. Whenever you make a movie, you have to meet an individual, a producer. He's like angel investor. Producer is giving money and he will involve to a certain extent, but you are given more freedom, and finally your film will be released. And he has paid you, the producer is making profit. Ashoka Handagama once tried through Facebook to collect money to produce a film. If he became successful, that would have been a very successful crowd-funded project in Sri Lanka. So what is crowdfunding? A large number of members, a large number of people putting their money for the business. Okay. Now let's look at the comparison. Bank loan, collateral. What is collateral? Assets. If the business idea fails, bank needs something to seize and sell. So you call them collateral. So whenever bank gives you a loan, they will mortgage something from you. They will securitize an asset of yours. Venture capital will not do that. Crowdfunding will not do that. Bank loans. The time is long. Now I'm going for the project report. Bank will take about maybe 1 month, 2 months to review again and again. There will be different questioning and answering sessions. Venture capital, the same way. I'm going with the project proposal. They're asking so many things. It's a long process. Crowdfunding, relatively fast. Okay. It's fast. Why? I'm going to Facebook and say, I have this idea. If you have money, give me. I'm going to do this project. Or I'm going to some other uh, kickstart.com or something today for crowdfunding and say, I want to write a book like Harry Potter, and I expect this much of money from that. And these are the first 3 chapters I have written, or first 2 chapters I have written so far. And immediately, the crowd will start to fund me if they feel the book will be a great hit. For that, we are using crowdfund, and it's fast compared to the other two. Relationship. Previous relationship with the bank is helpful. Yes. We said bank is asking you basically 2 things. Do you have assets? Do you have payback history? Okay. Payback history. How long will it take you? Have you ever taken loans earlier? Have you settled them? Previous relationship with the bank. Success rate. Okay. Now, the same thing. Relationship. Venture capital. Have to know the right person. I said that. Either there must be symposium or references. Crowdfunding can gain support from many people. Okay, you have idea, put it into the social networks like kickstart.com or maybe even just Facebook and say, I need this is my idea, can you give me money? Very simple as that. Okay, so you don't want to have any personal relationship for the crowd. Success rate varies, unlike to secure a large loan. Yes, venture capital 0.7%, 0.07%. Crowdfunding varies by platform. Crowd accepts 7 to 8%, followed by a success rate of at least 33%. Okay. Bank loans, they don't involve in day-to-day management. Venture capital. Okay, second CEO. My God, I have never heard such a designation. Second CEO. Right. Steve Jobs, the first CEO. Mike Makula, the second CEO. Right. Crowdfunding. No, they are not involving in day-to-day activities. Okay. Right. So this is the comparison between 3 types of new business loans, new business funding: bank loans, venture capital, crowdfunding. Yeah, these are some of the crowdfunding forms. Crowdfunding.com. Yeah. Then types of crowdfunding: reward based, donation based, peer to peer. So there can be different crowdfunding. Kickstarter.com. Okay, that's reward based. It involves individuals contributing comparatively small amounts of money to projects in return of some kind of reward, small amounts. Donate. Okay, it was a way to source money for the project by asking large number of contributors to individually donate a small amount to it. Peer-to-peer lending. Okay. It is practice of lending money to individuals or business through online services that merges lenders with borrowers. So you have 3 of these mechanisms. How crowdfunding works: you have a plan, you clarify that, create a component, post your project like in WhatsApp or in social media, then promote it, select rewards, donate money, distribute rewards, create success. So that's crowdfunding. Now we are coming to the end of the session. Startup Nation. That is a book about country with this flag. That's Israel. Israel is a very small country which was created after Second World War. Okay? Right. Israel is a very small country and the population is about 5 million Jews. During Second World War, the Nazis were killing Jews without any reason and they suffered a lot. After Second World War, when German, Japan, and Italy were defeated by America and the rest of the force, they found they had to do some justification to the Jews who suffered a lot. They were discussing to create a separate land, a country for Jews. And they selected a place in Arab. Those days, this idea was proposed by Americans, and the American president, Franklin D. Roosevelt, was consulted by the King of Saudi. The King of Saudi said, "We have nothing to do with Jews. We never did any injustice to them. It is the German who did it. So if you want to create a separate country for Jews, do it in Germany itself." However, Franklin D. Roosevelt died because he was a very old president. The next president, Harry Truman, without consulting Arab, he created this country in Arabian Peninsula, and you call it Israel. Israel had a population coming from different countries. Okay, Russians. And now comes the Russian Jews. They only know Russian language. Then the Poland Jews. They only know their language. Then comes some Ethiopian Jews. They speak a language which no one can understand. Then there were Jews from Germany who only spoke German language. So these founding fathers of this country called Israel, they had problem. There is a country with one ethnic group. Everyone is a Jew, but without a language. Okay. Think about Sinhala. We speak Sinhala. Think about Tamils. They speak Tamil. They believe their common factor among the group is language. Here comes an ethnic group without a common factor. So the founding fathers created a language, Hebrew, very old, dead language. They gave life to this dead language and made Hebrew the national language of Israel. Then they found they are living in another desert. They are living on a desert. It's very difficult to do agricultural activities on a desert. So there was a very good statement among them. Agriculture is nothing but 99% science and 1% hard work. So with no resources at all, with unknown nations getting together, they created a country with knowledge, right? And most of the time, they had investor symposiums sponsored by government. Now I'm referring a story of such. Shimon Peres was the prime minister then. He ran an investor symposium like Steve Jobs. A very young person went up to the stage and came up with his proposal. His proposal is, okay, now by that time, all the neighbor countries were enemies to Israel. All the neighboring countries that include Iraq, Jordan, yeah, then all the Arabian countries, they were like enemies to this small state. So this young person said, I believe that we have to fight with Arabian nations, and Arabian nations are rich because of oil. If so, we must run vehicles without using fossil fuel. Shimon Peres, the prime minister, said, very good, nice concept. But what next? There must be action plan. Okay. We, Israel, is not manufacturing vehicles. We don't have that capacity. What are we going to do? Then this boy said, okay, we have to discuss with car manufacturing companies and start up a company to assist to not to manufacture fossil fuel related vehicles. Shimon Peres said, okay, fine, let's arrange a meeting. And he said, okay, there are 5 leading car manufacturers, 2 in America, 3 in Japan. None of them will come to Israel. We are very hostile and very risky place. We'll arrange a meeting in Switzerland. Fine, okay, let's do that. So they did it. 2 American companies were not at all interested. They did not come to Switzerland to discuss on vehicles other than fossil fuel. But 2 Japanese companies came. Toyota said, uh, we are there. Okay, we are running hybrid cars. Then Shimon Peres, the Prime Minister of Israel, said, okay, hybrid cars are like mermaids. It's a woman, it's a fish. That's not what we are looking at. The Nissan CEO said, okay, we are almost there. We run electric cars, but we have issue. Our batteries are extremely expensive and still in the testing stage. Now, Israel started a company called Better Life. So they leased out vehicles separately, batteries separately. And that was the testing period for Nissan Leaf. And they were very happy because it's a small country and no one can run out of vehicle out of your country. Right? You can't run into any of the neighboring countries. So you are like selling vehicles within a prison. Anyway, this company, Better Life, which was a venture capital, right? Funding, leasing for electric vehicles, failed. The first startup, electric cars, failed. There were a lot of bugs. Okay? So venture capital is not always ending up in successful stories. There can be ample of failures, but we often see venture capitalists undertake a risk. When we say the Sri Lankan problems can be easily solved if we have one company like Apple, where their 1/4 profit is higher than our GDP, we lament we don't have any such. Now, why is America having such? Because they have venture capital, well grounded. That's another financial intermediation we have to look at. Okay, so go through these slides. Now you must understand what are the funding stages. Okay, what are the types of angel investors. If you asked, okay, who fund venture capital, your answer is angel investor. Then if you asked, name 3 funding sources of venture capital, then you must be able to say pension funds, insurance companies, angel investors, and venture capital companies like Virgin Venture. So you must be able to answer that. Okay, so with that, I'll end today's session. Thank you.